Over the last couple of weeks, crypto has been on a tear. Bitcoin is up, Ethereum's up, even Dogecoin is up. So it might surprise you to hear that the news surrounding crypto isn't actually good. In fact, it's pretty bad. Crypto is under attack from the US government, who essentially want to regulate and tax it to an extent that has never really been done before. Now, as you likely know, Cathie Wood of Ark Invest fame is a pretty hard crypto bull, and she's understandably as unhappy about this as anyone else in the crypto sphere. Now, conveniently enough, I've got some great clips from her about this whole situation to show you all, but really quickly, if you're new here, subscribe to the channel. We're putting out loads of videos just like this constantly that you don't want to miss out on.
The Senate is going to vote on the infrastructure bill, $550 billion. And it's a sensible infrastructure deal. It's all about infrastructure, which is what it should be from our point of view. Now, the vote, however, has been hung up. It was supposed to take place on Thursday, but it was hung up, interestingly, by some controversy around crypto, how to pay for some of the infrastructure bill with taxes on cryptocurrencies and crypto assets. And we believe that behind the scenes, there's fierce lobbying taking place. We do believe that the financial services lobby is particularly strong and has the ear, especially after the crisis in 08, 09, has the ear of a lot of politicians. And so we believe that the tax that they're trying to enact here would really harm the evolution of DeFi, decentralized finance, which is based primarily on the Ethereum network. As opposed to Bitcoin. Now, we're not happy about this at all. And in fact, we worry that our legislators could, with an act like this, chase away technology from our shores. Already, the U.S. has had a terrible reputation in terms of regulation around crypto assets, partly because there are so many regulators and they don't agree with one another on even what these crypto assets are. We believe they're a new asset class, but I think our regulators have been trying to put them into an existing asset class and treat them accordingly. We are hoping that they will be getting a lot of pushback. In fact, we are hearing they're getting a lot of pushback with voicemail. Who uses voicemail anymore? But voicemail apparently for many policymakers full. It's activated a lot of the crypto community and a lot of the innovation community because we don't want to chase innovation away from our shores.
So what is this bill that Cathie and the rest of the crypto world are so opposed to? Well, crypto has been wrapped up into the most recent infrastructure bill that the Democrats are trying to push through, and on the surface, it looks okay, as Cathie mentioned. There's money for bridges and railways and just general infrastructure stuff that most people agree make good investments. The first problem, however, is how the bill plans to pay for this infrastructure. They want to squeeze more tax out of crypto, and in order to do that, they are going to force brokers, exchanges, and even validators to send the government an awful lot of information. The biggest problem with this is that these people don't have this information, and the fear is that the world's largest crypto companies like Coinbase, they could choose to leave the United States as the requirements for them to operate will become just a little bit ridiculous. Now, the second major problem with this is specific to decentralized finance, or DeFi, and it mostly applies to Ethereum and Cardano. Basically, validators who pretty much run the DeFi networks would also be held to the same requirements as brokers, but they have even less information about the people they work with. It would basically become impossible to run an ADA staking pool in the United States if this bill goes into law. It will almost definitely push the development of DeFi away from the US, and that's one of the main controversies about this. Cathie's point about regulators in the US trying to force crypto into one of their previously defined asset classes is also true. She's right that crypto is a new asset class and it needs to be treated as such. If the authorities try to treat it as a stock or an ETF or a commodity, serious problems will emerge. Now, the final thing that Cathie mentioned there is that there seems to be a lot of pushback from ordinary people in the US, and again, she's right. Thousands and thousands of people were calling their representatives, telling them how they felt about the bill, and it was all starting to look quite positive.
If we were to frame this and say, and I'll quote John Lilly, who was on our brainstorm today, if we were to frame this and say, this would be a lot like regulating and taxing the internet in the early 90s, before it was really a gleam in the eye of many businesses. Um, that would have been a very bad idea, because the internet has been very good for the US, for innovation in the US, and has added a lot to our productivity and to the productivity of the world. But I think in terms of capital markets, the US really capitalized on the internet. Well, cryptocurrencies and much of DeFi is effectively unfinished business from the early 90s, and actually even earlier than that, when DARPA created the internet. No one at that time dreamed that that the internet would have anything to do with commerce, because it was for academicians, it was for intelligence agencies, for government, other government agencies, and it was never intended for commercial activity. Well, that was a miscalculation. And as a result, we never built into the internet a payment system. And we have a chance now to do that and add even more to the productivity of our economy and the global economy. And so, cryptocurrencies we've described as really money over IP. And we likened it in the old days to voice over IP, to help people understand, at one point, and this would have been in my life, I never dreamed that I would be able to make telephone calls for free, and it changed my life. My children can't ever imagine ever paying for a phone call. So, and we think that costs are going to come down and benefit the entire economy, the global economy, and that trying to shut it down now would be a very bad thing. And I would say that our regulators then would be blamed as innovation moves to other countries, would be blamed for preventing the US from enjoying the next big thing. So I know that there's a Wyden amendment that is trying to address some of the problems that have cropped up. And so we're definitely following that and hoping that it will succeed.
So right there, Cathie gave us another great analogy to use when looking at this whole crypto regulation thing. Back in the early 90s, no one in the world could imagine how much the internet would change our lives and how much wealth it would bring us. Decentralized finance has the potential to become the native payment system of the internet and could revolutionize the way we live. It could make our entire societies more productive and more efficient, and thus make us wealthier. Regulating and taxing the internet in the early 90s would have likely forced innovation out of the US and would have made the US far less rich than it is today. Now that exact same thing could be happening right now with DeFi. Now Cathie did mention the Wyden Amendment, which was attempting to exempt validators from these rules in an attempt to preserve DeFi and prevent it from being hit by the bill. But as Cathie's video is a few days old, we now know that the amendment failed to pass, which is pretty bad news. On top of that, the bill itself passed, which is again pretty bad news. It means that the regulation and taxation of crypto and DeFi in the US has begun, and there's a very small chance that it's not going to keep going further. But there is a possibility of a silver lining here. Now, before I explain what the silver lining is, I have to explain my point of view. In short, I support decentralization in all sorts of different ways. Decentralized finance and banking, decentralized governments, decentralized tech companies. It would be better for every person in the world if power and wealth were not so centered in a few square miles of a few cities around the world. And the truth of the matter is that most of these pockets of power are in the United States. If DeFi and crypto innovation is forced out of the US, there is a legitimate possibility that their development could prove to be better and more decentralized than if it remained in the US. After all, what's the point in decentralized finance if it's still dominated by the banks in New York or the tech companies in San Francisco? This bill could turn out to be a good thing. It could help balance the power of the most powerful companies that seem to be on a one-way path to world domination. Now, that being said, it could also prove to be awful. If, for example, China was to capitalize on the regulation of DeFi by the US and manage to make itself the worldwide center for DeFi, that would be an awful thing for the entire world. Now, just to clarify, I'm not saying that either of these possibilities are going to happen. I'm just saying that they both could happen. And it is possible that this bill could help DeFi in a roundabout way. If you're new to the channel, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part with the algorithm by pushing this video out to more people just like you. There are links down below in the description where you can get a guaranteed free $25 from crypto.com, up to $250 in Bitcoin from BlockFi, and up to $2,300 in free stocks from Webull. There's also a link to my favorite brokerage called eToro that you can check out as well if you want. Thanks for watching. Until next time.